Yeah, so Hamlet Youssef, I'm one of the managing partners of Irongate Capital Advisors. We're a hybrid VC platform. We invest in other VC funds and also do direct investments as well. Our focus is dual use defense innovation. This is technology that's going directly into the intelligence community and the DoD. So our thesis has been based on this need to drive private sector capital and innovation into national security and defense. For about 2 years, I've been putting out a private newsletter to my network and our investors, talking about kind of the state of affairs geopolitically. When Putin first invaded Russia over 2 years ago, I was very vocal, saying that we're seeing the beginnings of a three-act tragedy. Act one was the Putin aggression. Act two was the emergence of a nuclear hegemonic Iran that was going to aim to destabilize the Middle East. And then Act three was going to be the emergence of China's hand in trying to direct almost a splintering of the global economy, one based on centralized command and control, the other one based on more distributed, kind of what we have in the global order right now. What I've been looking at right now in terms of what's happening with Ukraine, with Gaza, and in the South China Sea, I think you're seeing a culmination of events. Near term, I think the amount and the tenor of disruption that's going to happen is going to be extensive. I'll let Adam get into his piece on Ukraine and what's happening in Russia, but these are not independent events. I think these are somewhat interrelated. I think you're seeing an axis that's trying to feast on whether you want to call it a lack of direction or engagement from the West to advance their own interests. And I think you're starting to see that happen, obviously, in Ukraine. On the Iran front, I think Iran is continuing to go down the path of becoming a nuclear state. They're trying to play some finesse at this point. They're using the death of Raisi to try to put on a cleaner, more moderate face, and that's what Pezeshkian, I think, is trying to position himself at. He's the newly elected president of Iran. When Raisi died back in June, I warned that look for Iran to position Pezeshkian as a moderate, and the reason they're going to do that is they need a moderate face to try to push a nuclear agenda. That obviously is going to have some significant destabilizing impacts on the Middle East. If you look at where we're at right now, a month after the assassination of Haniya, the big retaliation from Iran has not come yet. I think part of that is Iran is trying to, quote unquote, take the high road and continue to show themselves as a moderate. And I think the reason they're trying to do that is they want a nuclear agreement or a nuclear deal. My worst case scenario is they try to push for one going into the elections, because they know that if Biden does support it, he in essence is a lame duck president, and they're banking on whoever wins that is sympathetic to that position not rescinding or pulling back the deal. There's obviously no shock nor surprises if Trump were to become president. He would not support a nuclear Iran. The issue inside Iran right now is you do have a small minority that's in power. The minority that is in power is 100% hardliner. They have no desire for normalized relations with the West. I think they're looking to use the disruptions and the conflict that's happening in the Middle East right now as either a buffer point to give them the space they need to push across the finish line from an enrichment standpoint and a capability standpoint, or use that as a leverage point to exact some sort of concessions from the West. What's interesting is over the last month, you have seen the continued pot shots from Hezbollah into Israel, but this full-on inciting of a war on the northern front has not happened like people had initially thought. I don't think we're out of the woods. I think you're still going to see some sort of a greater conflict there. The question is what kicks that off, and what does the timing and tenor of that look like? You have a unique situation right now where you have parts of the Middle East that have not been traditional allies that are galvanized on two fronts. One, wanting to see a greater renaissance in the Middle East, and two, kind of a normalization of relations across the board, the Sunni world, the Shia world, and in Israel in particular. There's a faction within Iran that does not want that to happen, and that's unfortunately the faction that's in control inside Iran. The bigger piece behind this that I think people aren't fully grasping is, whether you want to call it a grand plan or not, but it's Xi's influence the CCP's influence, to use these fissure points to continue to weaken Western influence and control and swaying global economics and politics, and assert G and his kind of his style of future governance as the new norm. So we're now fully in the middle of a second Cold War. This is something I think if you're following the tea leaves, I don't think it's I think it's a big it's a big prognostication to make that statement. We're in a second Cold War of conflicting ideals. You're starting to see regional hot wars that are starting to heat up significantly. The question is obviously how hot do these become and how direct do they become? Against that backdrop, obviously you have the you have the elections that are coming up. I think from tonight, over the next 6 to 7 weeks, we'll get a better sense of which way the political winds may break in the U.S. And Xi, Putin, and Iran are looking at that, and I think they're going to make decisions over the next 6 weeks on what they want to do, aggressively or passively. That's going to advance their agenda. So I think you're not only within the next 6 weeks, the next several years, we're poised now for some significant disruption on the geopolitical scale, and what that means from an allocator and from an investment standpoint. There's going to be all sorts of opportunities for deployment of capital, not only into deep tech dual use defense ventures, but also infrastructure and supply chain resiliency. Because if we do go down this path of bifurcating into two global blocks, that is going to change and impact every facet of the global economy. So I'll pause there. I know, Adam, you wanted to kind of take off on those terms, but that's my outlook right now. Again, I don't see global peace breaking down anytime soon. So
thanks for that upbeat assessment. But you're leaving soon, so if anyone has any questions for Hamlet, and I see Lydia, you've joined. Welcome. Actually, time check. How much time do you have with us, Lydia?
Until the end. You got me for the whole hour. Yeah.
All right, perfect. Questions to Hamlet and his views of the world. And by that way, maybe first question. So Hamlet, in light of this, what are you investing into today?
Our big areas of focus right now are anything that touches autonomous systems, not actual drone companies, but more of the command and control and infrastructure that goes around that. So flight management, drone management, hardened communications, Ukraine and Israel in the South China Sea, as well as the Red Sea are basically test cases for how autonomous systems are reshaping and impacting geopolitics, warfare, and conflict, as well as anything that has to do with infrastructure around LEO, GEO, and cislunar. So basically, think of anything in outer space between low Earth orbit all the way to the moon, because for us, that is, I think, a pivotal high ground that is going to reshape geopolitics for decades to come. No different than command of the high seas dictated geopolitics on the kind of the launch of the Industrial Revolution 300 years ago.
How do you view the risks of the subsea cable issue? And there's a report that Russia's been probing quite a bit these days. How do you look at that? And then
Russia and China have been probing undersea comms for a while, but you also have platforms that are going in the opposite direction. So if those systems are compromised, abandoned, or whatnot, what role does communications play? That's space enabled, satellite enabled. So, but no, that's an area that's been hotly contested for years. That is just now starting to quote unquote garner mainstream attention, I should say.
And is there any protection for the risk from that, or how do you view the risk from that?
The risk is huge because that's controlling data, right? So whether you want to restrict or access or monetize that data, I mean, if you look at undersea cable communications, the amount of data that flows through there is massive. So if you can constrict that, but more importantly, if you can steal, siphon, control, manage that, that becomes something that translates into a true advantage. Because I think data analysis and using that data in geopolitics is one of the raw materials of kind of this conflict. It's almost like the bullets of the second Cold War that we're going to fight. So being able to access, control, and not protect data is a key area of contested conflict.
Phil, you had a question?
Yeah. So, Hamlet, what do you think the end game is of Western nations in the U.S., particularly slow walking resources for Israel and Ukraine? You may have touched on that before, but it's a quizzical set of events. Oh,
Thanks, Hamlet.
muted.
You're muted. Yeah.
Yeah, it's unfortunate because people are playing geopolitical football with the Israel-Palestinian issue, and not supporting Israel. And I think the issues that prevent that, personal opinion, are pretty disgusting. Because you have a country right now that's in a fight for survival, and it's not, I think, a Palestinian issue. I think the conflict that Israel is raging right now is specifically against Hamas. If this was an Israel-Palestine issue, then I think you'd see a much bigger conflict in the West Bank, which you're not seeing right now. Israel does need additional help and resources, especially if this conflict becomes a lot hotter with Hezbollah and Iran. So making sure that they have the right support, I think, is critical. And you can also make some of the same arguments in terms of Ukraine, where you've seen support in Ukraine. It almost feels like they've been given enough to kind of maintain the balance of power, but not enough to win. That argument is changing now. I don't think anybody really foresaw the Kursk offensive happening, and the impact that's having right now. Part of that, I think, is regardless of who wins in November, both sides, in terms of not only Putin and Ukraine, but also Israel and Hamas, Hezbollah, are seeing that some sort of a deal, negotiation may happen. So people are now trying to grab chips to be able to negotiate and counter-negotiate and work out some sort of a deal, whether it's a full stand down or not. That remains to be seen.
So, Adam, you want to ask a question or you want to speak?
I want to make a comment addressing Bill's question there about why is the slow walk, the politicians are slow walking. I asked an American farmer to write a piece, opinion piece, about what is the impact of the Ukrainian war on the American farmer. Give me a compelling reason, compelling argument, business case for supporting Ukraine. He has written a piece. I have to say it's not compelling. And I think, Bill, one of the reasons why you're seeing this slow walk by politicians is it's not resonating. War is not resonating with middle America. They are living, 60% of the country lives paycheck to paycheck. They're wondering, how am I going to send my kids to school? How am I going to feed my kids? Whereas in Europe, particularly Eastern Europe, Poland, the Baltics, that's right on their front door. They feel it, as the Ukrainians do. The Ukrainians are fighting for their lives. So it's a different dynamic, these politics. I just wanted to make that commentary here.
Fair enough. Michael?
Yeah, so my question, I guess, to all three of the panelists.
There's also Lydia. You haven't met her yet. And Lydia, why don't you introduce yourself?
Sir, well, let's go ahead with the question, and I'll do my intro afterwards.
Okay, so here we are, roughly 3 years into the fighting between Russia and Ukraine. And I guess my question is this. Recently, there's been some changes. So obviously Kursk, and it's not clear what the implications of that are. More interesting to me is that Ukraine is launching larger drone and missile attacks, hitting Russia, hitting Moscow. We just saw that overnight. And it seems like Ukraine is struggling in the Donbass. So my question is, gaze into your crystal balls, and what do you see happening or changing over the next, say, 3 to 6 months?
No, Hamlet's on mute again.
Look, my fear, or I'll take my opinion out of this. The answer to your question there is what do you think Putin's intention was to go into the Donbass? If you think Putin's intention to go in the Donbass was to reclaim old Russian land and fight progressive Nazis and whatever the hell garbage you want to believe, then once Putin has Donbass, once Putin has the land bridge to Crimea, then we're going to see global peace break out and all as well. If you think Putin sees this as an opportunity to expand Russian influence across all aspects of Mother Russia, then yes, a short-term armistice or peace is good for everybody. But Putin is 100% going to use that time to rearm, reassess, and understand where the next level of aggression is going to be as he tries to continue to build a network of buffer states around core Russia. Now, I don't think that means he's going to continue to invade Central Europe, but I do think there's a potential where he would then use that as an extended base of operations to weaken and topple Kyiv and put in his own person in charge of Ukraine, and then begin to understand how he can continue to either through force or through influence take over other nations around Russia, especially to the west, that can act as buffer states. I don't think he's going to succeed in doing that. I think he is going down a fool's errand. I think this is going to lead to his failure. And the big winner, the big benefactor of this entire relationship is going to be the true puppet master, which is Xi. Xi right now is so close to getting a failed vassal state in Russia to be kind of his chief supplier of raw materials and energy that he can control. He can now win and sway influence over the stands. And hell, there's a scenario where you can see a banked up Russia that needs to sell assets and resources back to China. The kind of interesting argument there is, I don't think the Chinese have forgotten about Outer Manchuria, land that the Russians took from a very defeated China at the tail end of the Opium Wars in the 18th century. China wants that property back. Whether they'll take it from force or whether they'll take it from a decrepit, broken Russia, that seems to be the answer. But I think you're going to have some sort of a near-term peace or a near-term stand down in Ukraine. But the issue there is you're not going to have a sustained agreement because neither side is at the point of capitulation and neither side wants to give up. Ukrainians want that land back. Putin cannot give that land back.
I'd like to add to that. Well said, Hamlet. Putin needs a ceasefire. The economy is overheating.
100%.
Shortage labor. He's got a shortage of labor. Inflation is taking off. The central bank's forecast that came out, 3-year forecast that came out last week, I believe it was. No, last month. There's messaging in there that's telling the Kremlin the economy's overheating. We've got a shortage of labor. You've got body bags coming back. You've got missiles hitting Moscow. Putin's contract, social contract with the people is in tatters.
By the way, she's contract, Hamlet, isn't exactly sterling.
Well, she's
right now.
Putin is, that's friends forever or friends without limits. There are limits to it. Yeah. She's motivation. She is driven by his goal is to become the largest economy in the world. He's not going to be able to do that with an anchor failed state like Russia. What Hamlet said, vassal state, that's true. That's going to be, if it continues the way it is, Russia will be nothing more.
So Adam, you and Hamlet will keep violently agreeing with each other for a while. So let's pause on that for a second. No. Okay, well, mostly so far. I do want to.
Adam's a smart man.
Yeah. Okay, let's just back to that violent agreement. So what I would like to switch gears, and I know we're going to lose you anyways, Hamlet. So you help set the stage. We're in a dangerous world. These are fundamental, forces, and we as investors, directly or through funds like Mendoza Ventures or Lydia's fund, which she still hasn't had a chance to introduce herself. or the governments are now getting into the accelerator games, right? And even one of our companies in Europe is being funded by NATO, their venture arm. So all that said, I'd switch gears if we could. I don't hit the governmental angle because it's more policy, but maybe back to be more Adrian and Lydia, if you can finally introduce yourself, Lydia, and then the two of you can say, how do you invest in this landscape?
Sure. I'll go ahead. Thank you, Mark. And thanks for having me. I'll do a super quick intro. I know we're already in the middle of the conversation. I'm Lydia. I'm based in San Francisco. I'm in Europe this week. Excited to meet many of you in London in 2 days. And I run Dev Ventures. Dev Ventures is a seed stage fund focused on industrial tech and deep tech. I look at areas like manufacturing, supply chain and logistics, transportation, mobility, mining, and agriculture. So looking at the really, really old industries that comprise 80% of our GDP, but that are the least behind on digitization. Many of the technologies I look at have dual use. They're used by industry and the government. Happy to chat more about that. A little bit about my background. I've been in venture for the last 7 years. Previously at Siemens' fund Next 47, where I was a partner. Prior to that, a fund called G2 Venture Partners that spun out of Kleiner Perkins, where I looked at growth stage sustainability deals. And so I've basically been spending the last 7 years in climate and industrial tech. I have an electrical engineering degree originally from Bulgaria. And I'm on the road a lot lately because I'm raising the fund. So kind of every week I'm somewhere else. So happy to meet many of you wherever you're based. And a little bit more, I wanted to add a perspective, maybe switching gears more towards what the geopolitical situation means for tech and investing. And it's something I've personally looked at and had many conversations with founders, with operators, with people in Silicon Valley, with people in Europe, where I've been spending the last couple of months. And it's that, and also my take on it is we're seeing basically two ecosystems emerge. And one ecosystem is, and that means not just for AI and not just for dual use technologies, but in general, especially anything related to AI and data. And these days, AI becomes table stakes. So almost all the technologies have some version of AI in them. We're seeing two ecosystems. One ecosystem is the US and their allies, the US, Europe, and their allies. And the second ecosystem is China, Russia, and all of their allies. So a lot, I would say, I would put the BRIC countries in that group, and anyone who has any country which has close ties to China and India and Russia. You could argue whether India will be on which side India would be, or which side, for example, Brazil would be, and so forth. But but what we're basically seeing, for example, I would argue that you would never see a Chinese autonomous car on US roads, the same way you would never see a Waymo car in China. The fact that these cars are loaded with sensors, they collect data, and there will be like a complete divergence of two ecosystems. And that's true starting with autonomous cars, but it's also true for any data that startups collect, and especially in this day and age, all the startups collect incredibly large amounts of data because everything is connected through APIs, everything is on the cloud. And for example, now when I look at a market size for a startup, like let's say a Silicon Valley startup, B2B SaaS is pitching me and is saying, oh, today we're looking at the US market, but in 2 years we're going to go global. It's actually not global anymore. Like it's really just US and maybe expanding into Europe and their allies. It's not like, I would really doubt that a US startup would be able to expand in a lot of the second ecosystem that I mentioned. Happy to hear your takes on that as well.
And how about you, Adrian?
Yeah, I think one of the things that I love that Hamlet said is we're in a second Cold War. And versus unlike the first one, billions of dollars have been set aside to buy innovation from outside of the US government. So in 2023, the Department of Defense released what's called the critical technology segments. And I'll post this in the chat for you guys to read. And within that, they started with 12. Now they've expanded it to 14. 14 sectors where dollars have been set aside to start innovation. And we'll talk about sort of how that looks like for us as investors. And about a third of it are things that we expect to see. direct energy weapons, space technology, things that are definitely a cause for fighting the war, in Afghanistan, the wars in Ukraine, anywhere that, why are they asking for direct energy weapons? Well, geez, let's sort of think that through. Then there's the second tranche, which are more things like AI. We're looking that there's a gap in China. I mean, that parallels directly into the CHIPS Act. My partner, Senator, who's a frequent guest here at 361, helped write the CHIPS Act, where billions of dollars were deployed into moving chip manufacturing outside of Taiwan, which is a risk, right into Indiana, Ohio, Middle America. And that actually tailors really well with things like rural broadband initiatives here in the US. It's about moving that manufacturing, and the CCT segments are focused on quantum technology, human machine interface, generative AI. And then there's that third piece, which will be a lot more deep tech, but also at the same time, they're looking at, hey, we would like to do DevSecOps, that, development security operations. Security, cybersecurity is going to be a critical part within deep tech, within the government. And so how they've done this, distributed these dollars out, is through a series of accelerators called, there's AFWorks, and they have a sub-segment for software called the Kessel Run, which is Air Force. SOCOM, the Green Berets have their own accelerator, and they're looking for companies that they can partner with the end goal of having a larger commercial relationship. We're investors in a Gen AI infrastructure company out of Palo Alto. We were the first money in. The previous 2 million all came from the DoD and the Air Force. Non-dilutive capital. They're not looking to become investors. They're looking to support the ecosystem. So us as investors across the US give us the ability to find capital that comes alongside of us. A lot of the time, this is matching capital to spur these innovation in these segments. But for us, this is what is very different than World War I, is they're now looking out into commercial areas to find things that aren't designed specifically for the DoD, but they want to make sure that there's a dual use component. There's just something that has commercial applicability that we can use again, but also that they're going to get, first dibs on the rights of these technologies and also help fund it. So I think this is where us as opportunity comes in as investors. That isn't just, again, who would have thought that the DoD would be funding the next generation of generative AI? I think Michael has a question up. And then Adam.
He does, and I love Michael and Adam. But Saptarsi, you talked about these accelerator programs. I think that's perfect segue to you, if you don't mind.
Yeah, no, absolutely. And Ensign has a whole swath of accelerator programs. One of them right now is running in Hawaii, and it's revolving around obviously the Indo-PACOM theater and the emerging threats that are being forecasted out of that region. So a lot of technologies where a lot of companies are involving solar power tents or developing AI supply chain platforms or UAS platforms, autonomy platforms, GPS in denied environments. So those are a lot of the variety of technology drivers that really are forecasted to be utilized in the theater if a conflict does arise in the next few years. A lot of people are saying 2027. And the military is concerned for sure that, if it does arise in 2027 or before, that we need to ramp up our implementation and work with the private sector startups and making sure that those startups can scale appropriately as well at large when the time comes. So I think the days of relying on the defense primes is still, we are heavily reliant on defense primes for sure. But I think, the startup ecosystem is vastly, growing rapidly. And obviously, the investors I speak to in New York and the greater US, are very interested in the space. And so making those connections with startups, they're developing the, proper technologies in the right portfolios like autonomy, space, AI, ML, and things like that. Quantum, that's a
very big area right now that's growing of interest for the DoD. And again, it's driven, why is quantum growing? Because it's driven by geopolitical tensions. China is developing a whole suite of quantum computing. And the fear is, they've grabbed all of our encrypted chats. And once they're up to speed on how to deploy that quantum computing at scale, they could hack every encrypted chat we have and then start decrypting it and utilizing it against us. So quantum is a very big area of interest for the DoD writ large. And but yeah, I think accelerator programs are a great way to get companies, startups, get them FaceTime with the DoD, with the right mission partners, and try to create some sort of integration. Right now, there's a lot of barriers to entry still. The government is deploying, and DIU deploys this thing called OTAs, other transaction authorities, which are one-off contracts that doesn't necessarily lead to like long-term contracts, but it's at least a way to work with the DoD and prove your technology. And then if it works effectively, then hopefully create a long-term contract mechanism and that allows that company to deploy its technology later.
What about investing into funds, which can amplify your impact?
From the DoD standpoint?
Mm-hmm.
Well, I mean, we don't invest, but we have mechanisms like the National Security Innovation Capital, which is looking to deploy non-dilutive funds into pertinent technology areas. I think they look at about 12 to 14 critical tech areas. And then you have the Office of Strategic Capital in the greater Pentagon, which is looking to provide loans to critical technology areas to investors who are helping them help their portfolio companies essentially bridge that valley of death and get through it. And so, like I said, like DoD does not invest directly in technologies, but we try to provide assistance to critical technologies through non-dilutive methods, whether it's SIBRs, OTAs, National Security Innovation Capital loans, OSC, Office of Strategic Capital loans, things like that. And as I've seen, military is a lot more wanting to engage with investors to understand what their interests are in these markets. And so that'll drive their desire to kind of hone in on what technology areas that are critical to them as well.
Yeah, I think to follow up on a question on investing into funds, I think, the DoD has actually teamed up with the SBA to do some of these critical technologies. But for funds and for investors, this is debt. This is not free dollars. But when you look at things like SIBRs, which are a mechanism which do a phase one, a phase two, that's non-dilutive capital, TACFIs, which are other sort of grant programs. I think sort of looking at funds that are being able to sort of, because I think the critical thing that's changed recently in the last, 10 to 20 years is gone are the days of going after the big five, the Lockheeds, the Grumman's, that are literally getting access to, RFPs, but it's now like giving access to smaller commercial companies, especially on the AI side, and finding fund partners that could give you a diversification across 10, 12, 15, 20 companies. Because here's the thing, some of these companies will get into phase one, some of these companies will get into phase two, and some of them will get into a phase three where they're now lined up, but not, and some of them will just get to one portion of it. And it's being able to get that diversification across the investments. I would say 1 out of 100 will get that DoD contract for, the 10, $20 million. But I think even if not, the companies that we invest in are using this as seed capital. They're using this as non-dilutive capital to now sell to other spaces in the insurance company or financial services. So regardless, for us as investors or funds, it's a win-win for us to get access to these dollars.
Hamlet, I see you.
A bit of caution. I got to run in a few minutes, but this is going to become a very hot space. 3 years ago, 4 years ago, 18 months ago, when we were having this same kind of conversation with allocators, family offices, investors, everyone rolled their eyes. Nobody paid attention to this space. It wasn't until the kickoff of the Ukraine war and kind of the emergence of the belligerent actions of China and Russia that people understood the importance of this. The problem is twofold here. One, the IC and the intelligence community in the DoD has 100%, not 100%, has emphatically moved into embracing this concept So you're seeing a whole alphabet soup of departments, agencies, and organizations get stood up to drive and bring innovation into space. As with all things government and bureaucracy related, well intended, with a lot of train wrecks associated around it. So if you don't know what you're doing, you're going to throw a lot of good money around bad ideas and companies that aren't getting traction. For example, the concept of CIBR, bringing non-dilutive grant money into the private sector.
Yusuf, your mic
I
is,
can't hear you.
there you go. I can hear
Sorry.
you.
What you're
There you
starting to see is family offices and funds who don't understand the space coming in and throwing millions of dollars behind companies who are running around saying, well, we got a bunch of CIBRs and contracts with the government, and we're talking to special parts of the special operations community and whatnot. The CIBRs, depending on what class they are, if you know what you're looking at, they're meaningless unless you're looking at CIBR direct phase 3, TAC 5, Strat 5. 1s and 2s are starting to become much more mainstay. So understanding where and what to invest in is critical. The various parts of the IC and the DoD, whether it's AppWorks, SoftWorks, Ensign, OSC, IQT, you name it, understanding where the true information nodes are is critical. Understanding who to listen to in terms of understanding true customer demand is critical. The defense, innovation, national security ecosystem, more than any part of any investment landscape, there is a significant information advantage, disadvantage. And part of that is by design. You do not know, and if you're not sure who you're investing with and who you're tied up in the last to, you're going to throw a lot of good money after good ideas that aren't going anywhere. So being very nimble, very efficient, and very plugged in terms of where and what to invest in is critical. I mean, for example, if part of the intelligence community comes out and advertises on a conference that these are the 10 pain points that are keeping them awake at night, do you think those are the real 10 pain points? Or is there a chance that those 10 pain points are areas that they're concerned about, 3 or 4 that you don't get visibility to are the ones that really are the ones that are going to grant or gain the attention of the end consumer. So being plugged in is critical because so many generalist VCs are pivoting into this space. You will 100% see failure. You're going to see funds who don't know what they're doing. You're going to bid up companies who are chasing a deck, and it's the same Silicon Valley bullshit of FOMO. So that doesn't work in defense tech. Defense tech needs to be funded and pursued through very deliberate, very measured placement bets around technologies that solve a pain point, that have the ability to make an impact on the field, that actually work, and have that dual use component. Because if they're focused on just an Intel DoD application, there's a good chance they die on the vine before they make it on the battlefield. So being plugged in, being connected is critical. If you're chasing a deal, you better have the acumen and the people who can diligence that deal and that opportunity. If you're investing with a fund or a fund of funds like we are, again, understanding where their network is, and understanding what gives them true proprietary access to not only deal flow, but customer demand and pain points is critical. This is a sector that a ton of money can be made and will be made with, as long as you're deploying nimbly, correctly, and accurately.
Yeah, I can't agree with what Hamlet has said. I think there's a lot more dollars. And so, for example, like we met with the SBA and the DoD, and they were like, all right, guys, like, hey, present to us. By the time we were done, we're like, hey, this company has a phase 3. This person has a phase 3. Here's our sponsor at the Air Force. Here's our sponsor at Space Force, which is kind of funny to say. We've also ourselves partnered with advisors and other investors that have security clearances, ex-Naval Intelligence, ex-DoD, as well as we just signed a partnership with a lobbying firm that was looking at more of a government tech, so that we could actually start looking at how do we pursue not just the DoD dollars, but also the lobbying dollars that are available there that get written into law, things like CHIPS Act, things like other things related to Homeland Security, where the DoD, regardless of what's happening from a political standpoint, some of these dollars may actually be, different. I've got to run. There's a fire alarm going off, but please reach out to me, reach out to Mark. I guess I gotta go.
And VC Puppy in the background, I see VC Puppy. Will we see VC Puppy in London?
Yes, we will. We'll be there in London. Bye, guys.
All right. So I guess
I've had my hand up.
you had your hand up. Sorry, Michael. Yes, I thought that was your icon. Go ahead.
No. So now that Adrian's run off, because he raised the CHIPS Act, and look what's going on with Intel right now, right? It's not clear what's happening with their foundry division. The foundry in Ohio is delayed. So that's really interesting. I wanted Adrian to comment on that, but I just want to agree with Hamlet. Putting on my entrepreneur hat, having dealt with SOCOM and SoftWorks and JSOC quite a bit. It really is who you know. Relationships matter. Two, DoD still hasn't figured out how to deal with things. And the best example I can give is when Hondo Gertz moved from heading up SOCOM and went over, and Hamlet, you might remember his exact title, was like Deputy Undersecretary of Defense for Procurement. Is that roughly correct, Hamlet?
Yeah.
They chewed him up. Right? They liked what he did at SOCOM with OTAs and, driving the procurement process. But when he went to DC, they literally chewed him up, which is a crying shame. And the other thing to understand is what is of interest today may not run on an ongoing basis. And the example I'll give is I was doing stuff with JSOC on Talos, the tactical assault light operator suit. And then boom, that went away. They took a few select pieces of that and it became the hyper-enabled operator, right? And so there's a lot of risks, even for small companies that get some funding out of various of the works or pieces of DoD, that, they'll get some money and then they'll be left high and dry. So it is a little bit treacherous.
Well, someone was saying earlier, we were talking about how things are middle America, Adam, how your East Europe feels this. Of course, we now have different elections in Germany with the implications of that. And really across Europe. How do we see Europe today? Lydia, you're there in Copenhagen. There's like they were stepping up, but maybe they're not. You'll meet one company in London that is doing 60 million of EBITDA from about 20 last year, making drones, dual use technology growth company, and there are others behind it. So definitely, I guess the contracts are there for those kind of companies keep growing, and they want to actually enter the U.S. market. But just how do we see Europe? You talk about this ecosystem; it includes Europe. How do we see it as a funding source and dynamic?
Yeah, I would say something interesting to be noted about Europe. I mean, as you know, it's much harder to grow a company here in Europe than it is in the US because the markets are still quite fragmented. You have different legal systems, you have different languages, different currencies still. I'm in Copenhagen, which is in the EU, but I still have to figure out the Danish kroner and so forth. But when it comes to funding, something interesting that has emerged recently, I don't know if you guys have heard, but it's the NATO fund, which is the first the biggest deep tech fund dedicated to dual use technologies based in Europe. It's €1 billion AUM. And interestingly, France and the US didn't commit to the fund. So now they're able to invest in any of the companies in the NATO countries that did contribute. So everyone except for the US and France. That might change, at least that's the case for this year. but they're investing actively in funds. They're investing in companies. They're very actively deploying. I have a good friend is one of the GPs there, and it's definitely a game changer for the region because it's already a pretty fragmented market where the event I'm attending now in Copenhagen, a lot of the attendees here are from Scandinavia. So a lot of kind of the local ecosystems have emerged as like, a Scandinavian hub, London hub, which is the biggest in Europe, the DACH countries, with Berlin being the biggest center there, and Paris again being kind of the French ecosystem, which again is very insular. So there's I would say a lot of French companies with French investors selling to the French market. And it's only kind of on occasion that any of these companies, whether French, British, German, or Scandinavian, are able to, or even Eastern European, are able to sell into the US market. So coming in as an investor, for example, with a Silicon Valley network for any company I meet here is extremely interesting. So gives me a lot of access. It's great to be able to have that cross-border network.
And Adam, that's
kind of piggybacking off Lydia, what she said, Mario Draghi just released a report on EU competitiveness. It was released yesterday. It was commissioned by the president of the EU, and it kind of talks on how innovation is kind of stifled in Europe and that they have to cut through a lot of red tape. Apparently, he recommended raising 700 to 800 billion a year in government EU funding to kind of stay afloat with China and the US, because a lot of companies are fleeing the European markets, via the IRA or things like that. So it's an interesting report. I definitely recommend reading it. It came out yesterday. It's on the EU website, so highly recommend. Sorry.
Yeah. I was just thinking maybe that's a segue to you, Adam, just that on the European theater. Someone who spent 19 years in the Eurasian theater.
I'm sorry, say that again, Mark?
I said maybe you could segue to how you see the Eurasian theater. And I know you created a few slides. Do you want to share those? Go for it.
Sure. Well, sure. Let me, let's see. Can I share the screen? This is really the presentation is really centered around Russia and how Russia itself is exiting the global economy. What are the consequences of that? So here, it's a short presentation. I've only got 5 slides here. So the topic is, as I've said, I write Barbershop Whispers, but I've been doing that for almost actually a year as of July, a weekly writing about everything in Russia, the economy, geopolitics. And the most recent has been about the alliances, cryptocurrencies, etc. So the presentation is about how Russia itself is exiting the global economy. The picture here is Lubyanka Square, and that pedestal used to have the Iron Felix Dzerzhinsky. It's a picture I took in, I think it was 91, and Dzerzhinsky was replaced by a cross. Has nothing to do with the presentation, but I love the picture. So let me see here, next slide. Bear with me here. Okay, here we go. So in this exit of Russia, you have the Western exits from Russia. This has been driven by sanctions and to some degree shareholders who are forcing the Western companies to leave Russia because of they're funding the economy, they're funding the war chest, they're funding the war through taxes. Now, the purpose of the sanctions are really to degrade the Russian economy. And on the other side, Russia, the Kremlin wants to keep the capital in Russia. Since February of 2022, Western companies have written off 107 billion in investments leaving Russia. Companies have been taken over like Danone, Volkswagen, Goldman Sachs left, Starbucks, Some of them have literally just self-liquidated. Even a self-liquidating process requires presidential approval, such as what Amex did and Goldman Sachs has done. The beneficiaries of of many of these assets are Putin loyalists. As you can see on the right-hand side, you've got Kadyrov and his nephew, 32-year-old nephew, who has taken over Danone. The process of exiting. Are you there? Can you hear me?
Where?
Okay. The whole process of exiting from Russia, the Presidential Commission will appoint an independent appraiser to appraise the asset. Whatever they come up with, it's going to be cut by 50%. So you exit at 50% of the asset value, and then on top of that, you have to pay a 15% contribution to the federal budget. So let's say you have $100 million asset. At the end of the day, your best scenario would be you're getting 42 million out of it. Right now, those exits are coming in at 30 to 35% of asset value. And that's really very sector dependent. If it's in the financial sector, it's probably going to be less. Many of the assets are being sold to, let's take Citigroup, for example. They sold their consumer portfolio to Sibnift, a Russian bank. And they still have some operations there, but it's mostly custodial activities where they're taking care of their global clients. So as I said, who's getting these assets? Loyalists. And it's really minting new oligarchs, is what Putin is doing. So let me move on to the next slide. Okay, now you have the Western companies that are still in Russia. You've got hundreds of them. Mondelez, Pepsi, JP Morgan, Citi, which I talked about, Raiffeisen, which is an interesting situation. Their reasons, some of them are staying because they believe that the war is going to come to an end soon. They've invested all this money into Russia, and they don't see a reason to leave. Pepsi is an example of that. Danone was an example of that. They have built a vertical supply chain system from farm to the consumer. Danone's an example of that. McDonald's is an example of that. And so is Pepsi. Some of them are saying that their commitment to their global clients and employees is paramount. They're providing essential goods and services to the Russian people. And there are certainly legal challenges to exiting. Now, let me be clear, I'm not endorsing these reasons for staying. Now, Russia also voluntarily, this is about Russia's exit from Western markets. Keep in mind that Russia leaving the European gas market was voluntary. Kremlin thought that they had a hold over Europe, which they did in terms of energy. But that has shifted. The European needs for energy are now coming from the US. They're coming from Qatar. Russia has been replaced by Norway for pipeline gas. Gazprom has lost $6.8 billion in 2023. That was their published loss. This is the first time since Gazprom was established that they've lost market. The pivot to Asia is much more challenging to the Kremlin, to Russia, than what they had originally anticipated. There's a pipeline that already goes to China called Power of Siberia 1. That pipeline is operating at 50% capacity, delivering 23 billion cubic meters of gas in 2023. Now, to put that in perspective, that's only 12% of what Russia was providing to Europe pre-2022. That was 180 billion cubic meters that they were, metric tons, like meters, yeah, that they were providing. Power of Siberia 2, as you see, crosses through Mongolia. She is not, they're having problems negotiating the offtake prices for Power of Siberia 2. They're also the Kremlin's also having problems getting China to finance it. At the end of the day, the Chinese are playing for time. They're in the buyer's seat. They've got a lot of leverage over the pricing. They want prices that are domestic prices rather than the prices that they were selling to Europe. Another thing to keep in mind, let me go back to Gazprom. 75% of Gazprom's revenues came from 1/3 of the gas that they were sending to Europe. 2/3 of the gas from Gazprom was being consumed domestically. Move on to the next slide. And this is something that was touched upon several times by Hamlet and a couple of other people. A piece that I wrote about the aggrieved alliances and their neighbors. There are two ecosystems, as was discussed before. The US and its allies, China, Russia and its allies. China is the enabler. Without China, Russia could not continue this war. China is the second largest economy in the world, and that means a lot. But China also wants to become the number one economy in the world. So she is being cautious. He doesn't want to, he can't upset the West too much because he will also be sanctioned, and they are already experiencing sanctions. The enablers I would call opportunists are people like India, Turkey. India last month imported more Russian crude oil than China for the first time.
Adam, are they enablers or beneficiaries?
I would call them both, really. They're enablers and beneficiaries. They're
Particularly India.
Yeah, particularly India. Yeah.
Well, I want to bring it back to investing wins. Is this the last slide?
Yeah, this is the last slide. My takeaway of this is failure. Putin's war on Ukraine has cost the country a lot. Not only Russia, but obviously Ukraine and the future of Russia. There's no turning this page. It will take generations to recover. He's isolated the country. It is the most sanctioned country in the world now. And in terms of opportunities, in chaos, there are opportunities. Emerging new trade routes, new markets for energy, the acceleration of new technologies like drones, for example, all of that coming out of the Ukrainian war. And that's it.
Thank you, sir. So
Thank
thoughts, questions on the Russian front?
All I want to say is, when's it going to end?
Well, Well, I mean, that gets that question. The Canadians, you know, they're polite.
That is a polite way to put it. Let's put it that way.
Let
But
it in. Here goes Samir and Bill.
Let me answer that question. When is it going to end? It's going to end when Putin is out of office, whether he's taken out or he dies.
guys, yeah, exactly.
That I don't see all these sanctions. Yes, they do degrade the Russian economy, but these sanctions will never persuade Putin in his small circle.
Okay, we got Samir, Bill, and Chris.
So, thank you. So, Adam, thanks for for that detailed kind of picture. What do you see as the opportunities, right? So clearly, the message is a new Cold War, de-dollarization, evidently, right? Because now you have you got India, you got China, you got Russia. They're playing their own game now with with the dollar versus bilateral agreements. What do you see as the opportunities in this unfortunate situation?
Well, I see a lot of technologies coming out of Ukraine. Let me focus. Let me talk a little bit about that. There's one project that I'm working on right now that is minerals processing. It's a very interesting technology that not for the Ukrainian war we would not see this, and we're seeing this with drones as well. They've got drones that are flying with fiber optic that I was reading about a few weeks ago. Now, how far is that going to go? A fiber optic drone? I don't think you can really send it 600 miles, but you can certainly send it 5 miles. Let me talk about also the enablers, the BRICS, this whole de-dollarization process. Let's keep in mind that it took Europe decades to create the euro. Not just Europe, the United States. It was a big project. The likelihood that the BRICS could set up a common currency with such very diverse systems, governments, I don't see that happening in my generation. Now, an alternative may be cryptocurrencies, which many of the BRICS are testing their own central bank digital currencies. Russia is doing that. They've just passed legislation on that. Russia is one of the largest crypto miners in the world, actually. They're second or third crypto miners. And this is a stark turnaround from just 2 years ago, where the Central Bank of Russia and the finance ministry wanted to ban cryptocurrencies. To answer your question, where are the opportunities? The opportunities are in technologies that are coming out of the war. The opportunities are in the disruptions in the supply chain. I know of people who have gotten into commodities trading, and they're making a fortune.
Lydia, is that something you're seeing, the supply chain?
Yeah.
Opportunities? Lydia.
Yeah, supply chain is, I mean, I think a few years ago, 2-3 years ago, everyone realized that supply chains really matter, and they're broken. And they're still, and they're broken because they're very global. And as soon as we have a global disturbance, that affects every company, no matter where. And I would say, I mean, I was recently, not recently, but a year ago in Taiwan, and many folks I talked to there are kind of not, for example, not keeping their money in Taiwan because they think they might not be safe to keep things there. And there's definitely that tension that you could feel if you're in the country. And I would say, like, I have been investing in supply chain for over 7 years now, but only recently it became an interesting topic that finally the world realized that it really matters when we all saw how broken it is, and everyone was shipping kind of the just-in-time that Toyota piloted a few decades ago had become the norm, and everyone thought, oh wow, we're excellent, so efficient, we're shipping everything just in time, relying on the assumption that you could get all the components at the predicted the lead times that you would be quoted from your suppliers, and you didn't need to keep that much inventory. What happened now is we started seeing stock out. So we saw kind of an explosion of companies trying to stock up on components because the supply wasn't reliable, and the supply chains end up going into this cycle where there's undersupply, oversupply, because it's hard to predict kind of what happens, and the industry is driven by a lot of fear of what would happen if this kind of catastrophic event happens again. And I would say now we're maybe finally in a little bit of a balance where things are more or less like moving smoothly now. The lead times for components, like the chip shortage, is not as pertinent anymore. We're seeing a lot of startups I was working with, like hardware startups, redesigned their components just to be able to accommodate, for example, for different chips or for different different components, so they wouldn't depend on just one technology. And it made a big dent in the hardware world, and that can be felt now across the board, and will still be the case for anyone building in hardware.
Great. Thank you.
You're seeing, let me say one more thing about the supply chains. You're seeing companies set up redundancy in those supply chains, backups, and those backups include manufacturing.
Bill?
Yep. So, Adam, that's a great summary. A lot of stuff that was probably some I knew about, but really you pulled it all out. So thank you for that. Question on China's aspiration for being the world's greatest economy. That's been around for a while. Certainly don't question the aspirational aspect of it. But in order for them to do that, they would have to grow their economy by 37%. And then they also have the demographic time bomb, if you will, that's facing them, probably, could begin affecting them, 2050 or something, which isn't that far away. What do you think? I mean, is that possible? And do you think that all of a sudden, if they have to take a cold shower on that one, could that cause other geopolitical rippling?
That's a good question, Bill. I don't see them, at least not in my lifetime, becoming the number one economy. The demographics is a serious problem, and the real estate market, China is really taken it into a tailspin. Xi is being very cautious right now. He cannot afford to irritate the Western dominated economy. He doesn't need those sanctions right now. Both he and Putin are looking to hold on to power. And with a bad economy, and he's got Putin as an anchor, it's not a good formula for him. I don't know if I answered.
Yeah. No, it's helpful. I would have said pre-COVID, it was definitely a possibility, but it's doubtful. So I appreciate your thoughts.
Chris Mayo?
Just a quick question. I mean, does either side really have a plan to restore the breadbasket of Europe now that it's effectively been hollowed out, probably for generations?
Good question, Chris. You are seeing those vacuums being filled by other countries. Actually, Middle America, the farmers are actually supplying quite a bit.
Food inflation. Yeah.
Right. Well, you look, the cost of fertilizers for American farmers has skyrocketed.
Yeah.
people don't realize that a lot of the fertilizers, potash in particular, came out of Belarus and Russia to supply Middle America. That was one of the issues that this farmer who I asked to write this piece, he raised that the cost of fertilizers and the volatility in the food markets that has really hurt American farmers. So, yeah, it's a global market, but it is being filled. The markets are adjusting.
Lydia, how do you think about forward earnings and the future revenues for companies in a divided in a dual track global system? Because you have to start discounting pretty considerably what you were looking at before. You started to touch on that, but it's coming now. So how do you think about that now?
Yeah, I would say when a company now quotes me the current TAM, let's say the current TAM is the US market, I would assume the most they can do is double that TAM when you add Europe and the additional allies, which in the past it used to be like kind of the rule of thumb that we were using as VCs was US TAM times 3 is the global TAM, and now that's reduced by a third. So now you can only double your market if you expand internationally. So that's more or less kind of how we see it, like in Silicon Valley, how I've seen it across different firms. And the same, I would say, for a European company expanding into the US, it's even more difficult because there's more friction, and entering the US market is a lot more competitive. So it's kind of a lower probability as well to like make it big in the US. So and a European company telling me that they'll grow, 20x in 2 years or 3 years is, I would say, a lot more realistic than a US company making claims for big growth.
And by definition, a bifurcated system is more expensive. So how are you thinking about inflation in that environment and the cost element of it as well?
Yeah, the inflation, I mean, as we saw in 2021 in the kind of cheap money, zero interest rate scenario, which it was abundance of money, abundance of capital. Everyone was raising venture funds. There was a lot of IPOs. There was we're seeing really the difference now. Like we're seeing kind of as we mentioned earlier, like no exits, no liquidity, no IPOs are happening. M&A is mostly distressed. It's just and then the big M&A that has been happening now is going under kind of secondary reviews for anti-competitiveness. So it's kind of not the best time to really look at the venture world and say, hey, what are all these companies that now are sitting on high valuations from 2021? Like, what will happen? Like, all of the VCs and all of their LPs are looking for liquidity, and that liquidity right now is not happening. So, looking at inflation, I mean, unfortunately, the venture market is very much correlated with the monetary system, with the interest rate specifically. And inflation plays part of that, right? So not necessarily high inflation means that the things are going bad or good for the venture world, but I would say the interest rate is the highest correlation to the venture market and to how the monetary markets operate and how much money is available for a asset class, which venture is kind of a very, as you know, like it's an asset class with high upside, but also high risk. And when there's abundance of money, that money is kind of usually is more, those folks are interested to put that money to play where maybe you can lose it, but maybe you can also quadruple, triple, 10x the money, which is not really possible in a lot of other asset classes.
And then with the $800 billion, $900 billion proposal from Draghi, which is going to meet fierce resistance from Germany. It already started with Germany, but will meet it from a lot of the nations. How does Europe fit into this as really getting out of the doldrums that it's in, or how do you see that playing out?
Yeah, not very familiar with the implications of that. We haven't followed.
Thank you.
I want to, one of the comments that I wanted to get back to, the two ecosystems, and the technology transfers in that. Looking at Russia, when my last job in Russia was with the Rolf Group. We were the largest distributors of foreign cars in Russia, a multi-billion-dollar company. All of our cars were Mercedes, Audi, Porsche, Ford. 1 out of every 3 cars came through us in Russia. Today, the auto market in Russia is Chinese now. More than 50% of the cars are Chinese cars, new cars being sold. What is Russia getting out of that relationship? Nothing. Russia's exporting minerals, raw materials, and what are they getting? They're getting value-added goods, but there's no technology associated with that. Okay? It goes to the process as well.
But I would say, Adam, to your point, technology is being developed in China where privacy laws are next to nothing, and the models that are able to be trained there are incredible and extremely powerful. In fact, it's much easier to train models in a place where you have unlimited access to data and no privacy, versus here, if you try to, train a medical model, it's good luck with that, collecting medical data with all the compliance hurdles. And so, in that, I would say the US has a disadvantage, in Europe as well, with all the HIPAA laws and GDPR. It's huge disadvantage because access to data is very limited.